let's come back to Dan on this, as we've seen some weaker numbers on GDP out of the UK. What do you make of negotiations over Brexit and some of the uncertainty investors, businesses, consumers still face?
Well, the first thing is the weak GDP that we saw was predominantly because of inventories. So we might see a bounce in the third quarter. And I think that also from the perspective of negotiations, what the government is doing is to play hardball. It's basically throwing the message to the European Union that we're out on the 31st of October, so you need to get reacting quickly. The European Union obviously is playing hardball and saying there's nothing to discuss. But ultimately what both of them are pushing is for a last-minute agreement. I think that all of this is aiming towards a last-minute agreement, and many people think that it's impossible. But if you look at the agreement that was reached by Theresa May, if you look at the contentious issues, you basically are talking about three things: the Northern Ireland backstop and a couple of other things, including the calculation of what needs to be paid to remain in the agreement. Now, what I think, therefore, is that it is more likely that we reach a solution and definitely an extension than what the market is currently discounting. And what I think is that the messages coming from Secretary Bolton and from the Trump administration definitely helps the UK government have sort of an ace to negotiate. However, it is very, very challenging because we talked about the issues in Italy. The European Union cannot look weak right now. So it's going to be a very, very interesting period. I don't think we should be extremely optimistic about a quick and easy solution.
I take your point on that. And if we look at sterling dollar and how quickly the trade has fallen away from about May this year, that was so the trading range and the height, and the trade has collapsed right back to the 120.54 handle. Are investors overly pessimistic then, if you think that this is a game of bluff and that there could be that 11th hour deal struck with European partners? Yeah. Has the currency dropped too low at this point, and what are the economic implications?
I definitely think that the market is probably being too pessimistic about the pound. Especially considering an investor that is trading the pound relative to the euro seems to be pretty aware about the risks of the UK side, but none of the European ones. And more importantly, a very aggressive monetary action from the ECB. So I would be at least thinking that the pound right now is discounting a worst case scenario in terms of Brexit, or at least very close to a worst case scenario. And I think that if you look at, for example, how gilts have strengthened, and if you look at the underlying negotiations, which exist, by the way. People think that there's absolutely no talks. There are negotiations happening today as we speak. I think that we should have a more benign view about the pound probably at this stage. I think that we have discounted quite a bit.
I think on that note, I saw some data yesterday showing that short bets against sterling have risen to the highest in more than 2 years. That's among the non-commercial players, so hedge funds, asset managers, and the like. If investors are shorting the pound or exiting their sterling positions, where are they going? And to your earlier point about the US dollar being the world reserve currency, I mean, is there anywhere to go besides the dollar?
Well, obviously the yen is also a safe haven here. I would very much doubt that those hedge fund traders are taking aggressive long positions on the euro relative to the pound. I think it would be quite, I would not recommend it, considering what Ms. Lagarde might announce. So I think that basically what we're seeing is that currency traders are moving either to the dollar and the yen or to cryptocurrencies and gold. Obviously, you have seen how gold has been rising on the back of this uncertainty. So it's basically what you're hearing almost out there is that everybody fears very aggressive monetary policy from all of the non-reserve currencies, and as such, you're looking for any reserve of value asset that might help you at least save some money.
Just quickly, Dan, the ECB has its eye open looking at that door to try and cut. But what about the Bank of England? Which door does it have, cut or increase?
Well, I don't think that they are going to increase rates. There's no indication that needs in the data that tells you that the Bank of England should raise rates. There's no need. What I do think is that the Bank of England does have a few tools. If you look at the balance sheet of the Bank of England, it has actually not risen dramatically. So it does have a few tools to offset some of the impacts, but not many yet.
Dan, thank you very much for that. We're coming up to the market open. Stay tuned.